Welcome to episode 3 of Cryptenomics. Today we'll be chatting about just the general business of blockchain, where we see it going, and some obstacles in the way. This can be hours of discussion, but, I'm going to sum it up more from my point of view, from the financial point of view, and we'll just chat it out. It's something we talk about all the time.
Yeah, definitely.
One place to start is just to question why, institutional investors are reluctant to invest in crypto. I guess there's obviously legal reasons. If you're running a hedge fund, it's possible your investors will have some compliance rule where they're not allowing you to invest in crypto. But then there also are just many brokers, prime brokerage services, that are just not touching crypto right now because they're not comfortable.
Yeah.
But at the end of the day, you can find a broker who will invest in crypto for you, and there are hedge funds. There are certified hedge funds in the U.S., I think around 300 now, that are investing in crypto. So it's possible. It's just
those numbers are definitely growing.
Yeah, it's just a little bit more of a headache. But I think even beyond the legal aspect, because there are ways around that, there's just hard operational issues right now. In traditional finance, I know that a lot of our viewers don't come from a traditional financial background. There's a lot of tech and younger guys. But in traditional finance, there is a big operational infrastructure for people to run funds and for people to invest and track their portfolios and, different services. We could break it down into there's prime brokerage services, there's fund administration services, there's soft fintech, financial technology vendors that do risk management, portfolio management, order management, EMSs, portfolio management. And a lot of these hedge funds, as they see that they have to manage everything on Excel and hire employees to do it manually, it's just not a very attractive investment right now.
Yeah.
So some things that I would like to see, I would love to see prime brokerage services to really start adopting crypto. So really start getting a Rolodex together of high net worth individuals who are already looking to invest in hedge funds and also understand which of them are open to investing in crypto funds. That alone, if you go to a mid-level prime brokerage service, small to mid, maybe like Wedbush or like Lightspeed, maybe their investor relation services now can also include investors who want to invest in crypto, and it'll help these hedge funds and help these traders get involved.
Yeah.
Then there's obviously operational headaches. So fund administrators, right? If you're starting a hedge fund, you need a prime brokerage service to work with you who helps you do investor relations. They get you good prices. Maybe they'll do some lending, like for margin trading. But then there's also fund administrators, right? A fund admin is just a fancy word for an accounting firm for a hedge fund, really. It's just your official book of records.
Got it.
But fund admins right now are having huge headaches, right? Managing these, even if they have 20 crypto clients, every trade is a capital, gain or loss right now.
We see this firsthand, but the process of doing your taxes for crypto is very complicated. There's no real simple solution right now, particularly because of the lack of standardization between the exchanges where you're really trading, where these transactions are happening. So having all this data in different formats, coming in different ways, it definitely adds a lot of complication to that accounting process.
Yeah, absolutely. I mean, these exchanges are not truly using like the fixed protocol, right? So like in finance,
some offer it, but
some
the
offer
vast
it.
majority.
Yeah, GDAX, I believe Gemini, OKCoin has a fixed hub. But, Bittrex, Poloniex, all of these exchanges should be using a protocol that Wall Street's already hooked up to. It's a good protocol. There's trillions of dollars flowing over it. It's been working for decades.
I'm not as familiar with Fix as you are, so we've definitely talked about this a bit. I don't know if I'm as convinced that it's the future as much as it has been a good protocol to date, but it certainly could be. I don't know enough to say definitively that it's not, but I know that a lot of traditional finance has become somewhat antiquated. So I'd have to definitely understand more specifically to Fix, but there's a lot of new tech and there's a lot of new ways of moving data around and passing those messages.
Yeah, I mean, I think so. While I agree with you, I think it's a bit of a tangent, right? Because I agree that there might be better protocols than the fixed protocol, and there might be improved ways of sending these messages in a lightweight manner where it's like less intensive on servers and whatnot. But the reality is that there's no way that crypto has enough leverage to make a new service to get Wall Street into it. It has to go that way and then innovate.
The existing infrastructure for fixed definitely gives it a big edge.
Like crypto right now, for crypto to get integrated with these broker platforms and be able to send and receive messages, they should probably go in the fixed protocol so that they're just integrated with the system. And then both crypto and other financial technicians can come together to make a better protocol. But I don't think that it's crypto's business right now to
No, I certainly agree.
Tell them how
I
to
certainly
do it.
agree there. I think that there's a lot of merit to using fix, especially to kind of bring crypto into the fold, so to speak, and make it more accessible. So I definitely agree with you.
I mean, even we're dealing with that headache, right? So we're co-founders of a company called Cryptenomics, and part of what we have to do, which is a very slow process, is normalize and aggregate all of the data from these exchanges.
Yep.
Because they all are different. So it's definitely a big headache. And so, these fund administrators or these accounting firms and these prime brokers and even the hedge fund themselves, there's the front office, right, which is generally people who trade and are dealing more with the market. And then there's back office operations. There's middle office too. But the back office operations is dealing with more like allocations, sending out end-of-day files, reconciling start-of-day files, and making sure your data is accurate. And there's a whole operation to how these funds work. And if they don't have any automated solution or any back-end piece of software to rely on, and they have to do everything on Excel, it's just not attractive for them to invest in it. So there's definitely some barriers with, like we said, the legal side, the operational side, and, just the overall infrastructure for investing, creating a nice avenue for investing. And then obviously, so another big thing, we were talking about more portfolio management, like reporting and aggregating data. But then in finance, there are these things called OMSs, order management systems, and EMSs, execution management systems, and allocation modules, way for you to sort of get all of your trades on your blotter, and then you can allocate them to certain accounts, more for legal purposes, like for a hedge fund. But, there's no reliable EMS in crypto. So
that's something like Coinigy?
Like Coinigy, exactly.
TradeDash?
Exactly. Like Coinigy, TradeDash. And, Coinigy is good. I've used them. I think they're doing great things for the community. But people say that, sometimes there's lag on the order books. And sometimes, they can't send orders how they want to. They have to use, full numbers for some reason.
Yep. And they recently issued a statement on a lot of this, and I have to in some way defend them because I feel that a lot of that really isn't on them and it's unjustly blamed on them. A lot of these issues really do come back to what we were saying earlier with the exchanges, and the exchanges just are not normalized to each other. There's no standards. There's no everything is very fragmented. So that moving that forward will definitely improve the quality of services of secondary services like Coinigy, other execution management systems, order management systems.
Yeah. And any system, right? So as long as these exchanges are willing to start stepping their shit up and saying, okay, these are specs. This is what every order type looks like. If someone withdraws, deposits, shorts, this is what you should expect. The infrastructure and the software and the just general entrepreneurship behind crypto right now will be much more sophisticated, much more mature, and ready to take on mass exchanges.
Yeah, and a lot of these exchanges are definitely bringing in the money where it's not unreasonable to expect that they will try to improve these things actively.
Exactly. It's just another business feat, right? So the New York Stock Exchange doesn't do that stuff, right? The New York Stock Exchange focuses on liquidity and being an exchange. You don't go to nysc.com.
Exactly. So yeah, I think it's
also like a business delegation thing, right? Are these guys starting exchanges, exchange guys, or are they guys who also want to create tools around it and specs, and do they care about that? And they should. We're talking about Coinigy just because, right now everyone's trading directly on exchanges. So if you're trading on 10 different exchanges, all of your portfolio is spread across 10 different domains, and you have no way of really seeing it in one comprehensive view. And it's getting now to a point where it's a bit frustrating. I think that crypto is new, blockchain is new, but it's not brand new, right? We're almost at the 10-year mark, or
Yeah, we're just about there.
we're just about there. 10 years is very young. I'm not saying that we should have this like full blown infrastructure, but it's at the point now where there's a lot of liquidity and a lot of serious players want to get in, and there's no easy way to get in.
Yeah, I agree with you. I do think that we're definitely seeing the beginnings of that change, and people starting to step it up and step their operations up and realize that things need to improve a little bit for the industry to grow as a whole.
Yeah. So I think, I definitely think financial operations is, in my opinion, one of the most important businesses for crypto to really tackle, because that'll really promote liquidity and just more money flowing around that economy.
Sure. Yeah, that makes a lot of sense.
But there are other business opportunities, right? Like seemingly an infinite amount, because you can decentralize a lot of things and you can globalize a lot of things. But I guess one is banks.
Yeah.
Right, and they're also being an obstacle.
Well, yeah. So I think that banks will be one of the most truly oppositional industries to crypto, because more than most, crypto has the ability to truly displace them, make them obsolete potentially. So I think that there's a good reason from their perspective why they're against it, opposed, and why they will probably continue to actively prevent people from investing in crypto and getting into crypto. But hopefully it won't be stopped.
Yeah, I love this topic because I feel like a lot of people who enter crypto and are not financial don't really understand what it means when people say disrupting banks or displacing banks, right? It's pretty fascinating. Crypto is the first example where a fiat-based system, which means a government-backed currency, can actually leave the system. Like, that hasn't been done before. I mean, yeah, you can move to Europe and you can change your US dollars into euro and left your bank, but it's still kind of in this global system, government-backed system. And the same thing goes even when you're buying regular equities, right, on the stock market. I mean, when you buy these equities, you're going through Scottrade and a broker, but ultimately your money is on this centralized platform. It's being converted back and forth into US dollar to equity, to US dollar to equity, or to option contract, whatever it is. But it's all like within the system. Crypto is the first time where I can tell a bank, okay, I'm going to take my US dollar that's in my savings account or checking account, whatever, and I'm going to buy a Bitcoin on Coinbase. Or I'm going to withdraw the US dollar and buy a Bitcoin in person from someone. But once that exchange happens where I give my US dollar to someone and then I get Bitcoin,
your value is no longer in that traditional system.
It's way out. I'm on my desktop. It's not owned by anyone. And as long as I don't sell back to US dollar, the bank will never see that money again. They'll never see interest on it. They'll never make money on the floats, on transferring it. It's just completely out of their control unless they start making custodial services. But it's pretty interesting.
Yeah, so again, they do definitely have good reason to be scared and to fight it. But that's only in their best interest and certainly not in the best interest of the world.
It's not. And also they reinforce our point, right? Like the whole philosophy behind crypto, initially at least, was to give power to the people. To say you have the right to use your money how you want, spend your money how you want, and when you want, and cheaply. So now when a bank looks at you in the face and says, nah, we don't want you to buy that for either no reason or they tell you because they feel it's too risky, even though there's very high risk penny stocks that are pump and dumped and manipulated. But for them to look at you in the face and say that, you want to look them back in the face and say, you're reinforcing my point. You're telling me how I can or cannot spend my money, or I thought it was my money. But really, you're telling me how I can or cannot spend this money that's in your control. And it's, a few deviations away from personal ownership when you put money in a bank, for sure.
It's a bit troubling.
Yeah. See, on the other hand, the credit card companies, I understand, right?
Yeah, so
that's reasonable.
The credit card companies, when I first heard that you could buy crypto on Coinbase with a credit card, that seemed super backwards to me. At a very high level, just a basic level. But then when you think about it a little bit more, it does make sense that credit card companies don't want you buying such a high risk volatile asset on credit, because there's a good likelihood that you made a bad choice, and in a month when it comes time for you to pay your bill, you're going to be out all that money that you spent because the crypto dumped and you didn't hold your hand and you panic sold.
Yeah.
So I also understood the bank's perspective, but I think that this is way more justifiable. As a business, they're giving you the credit, and it's their prerogative to make sure that they're getting paid back and analyzing the risk in lending you that money.
Yeah. Absolutely. And I wouldn't expect a bank to loan me either, right? Same thing. But if it is my money in my savings account,
absolutely. Yeah,
then
yeah.
they can,
there's a
they can
line
fuck
there,
off. Yeah.
unquestionably.
Yeah. So it's interesting. And then, but it also gets interesting where we also have to make sure that the technology for wallets gets better, right? Because if Coinbase gets big, or maybe Robinhood tries to compete with Coinbase and make a custodian, or there's this another company, Abra, now doing it. Now we're trusting these companies with our crypto. And then eventually they're going to say, this is how you can spend your crypto or not. And, we just have to keep being aware of that and not ruin the core philosophy.
Absolutely.
And it would be funny if they said, nah, you can't buy fiat. I think that would be funny.
It would be. But yeah, I think that these custodian services are going to be big. I think that that's going to be another thing that's going to help, the bigger fish get into crypto, make them comfortable with it, and also help, even smaller guys who just aren't technically savvy, and, it's intimidating. It is. There's no question. I have had far more technical people approach me and say, how do I get into this? It interests me. I like it. But, when I try and read some of these guides on how to buy your crypto and store it safely, a lot of it's going way over my head, and I don't know that I could put this together. So I hear them, and I see where that difficulty is. So those services will definitely be a big part of that.
Yeah. And then obviously the other big business is just, we had our last episode was about this, but really ICOs. People are starting to take more legitimate takes on them now. People are starting to do private securities out of it and really tokenize them to show ownership. Because ultimately you can have it represent ownership in a company, but the cool part about it is that you globalize it now. So you're not just doing an IPO roadshow with Goldman Sachs if you're trying to go public and just raise money from U.S. wealthy accredited investors. Now it can go global, and it could be $20 here, $50 here, $10 here, $30 here, and you can raise just as much money, and it ultimately, redisperses wealth. I think that ultimately the end result of crypto right now is that in our lifetime, or at least over the past, what was the dot-com bubble, which had a lot of entrepreneurship and minted a lot of new millionaires and billionaires, but crypto is really like the biggest wealth redistribution we've seen in a while.
Yeah, I agree. I think that the lower barrier to entry, where a traditional IPO roadshow, you or I, your average Joe, can't get in on that. Yeah. But with an equity backed ICO, you can throw $20 on, and you can have a piece of that pie. You can really get involved in something that was previously beyond your means. So I agree, definitely there.
Yeah. Yesterday, what was it, Kevin O'Leary?
Yeah, Mr. Wonderful.
He was, he's being a little closed off about it. He's not saying any names or the name of the hotel, but he is looking in New York City to, it looks like, do an ICO for $400 million that is backed by real estate, and he's claiming that it is ownership like a stock, but it's global.
And he's also claiming that it's approved by the SEC, which is huge.
Approved by the SEC to get non-accredited investors, it looks like, globally.
Yeah. A smart contract that's been approved by the SEC, that would be a first and a pretty big deal.
Yeah. I had mixed feelings on Kevin O'Leary, but I just find it hilarious that he would enter the crypto market with an ICO.
Yeah, no.
It wouldn't be like, how can I better the technology or create a lightning
It's how can I make a ton of money? And that's definitely his MO, and he's not my favorite person to be pioneering, new fields in crypto, new spaces in crypto, but he's certainly got a lot of money and a lot of reach. So maybe it will be good for the industry. Maybe it will take crypto to a new level. It certainly sounds like it might.
No, I'm optimistic. I hope he pulls it off.
Yeah.
For whatever that's worth, I hope he pulls it off. I never thought I would say I hope Mr. Wonderful pulls it off, but it's interesting. And I think it's better. I always thought the accredited investor thing was kind of BS. I sort of understand it, but I understand the concept of it, but
I mean, it's making
but
sure that you.
but the way that they do it is silly, right? They should at least have a standard. Like, you shouldn't need to be making 250 grand a year to be an accredited investor. It's more of a knowledge thing, right? So they're saying, well, if you have this net worth, you could be an idiot and have a high net worth.
Yeah, well, I don't know. Actually, I never saw it as a knowledge thing. That's an interesting perspective. I saw it more as, you are going to be making a significant high risk investment, and you have the money where you're not going to be living in the streets tomorrow if it goes belly up. That was always my perspective, just knowing that you have the financial cushion to really properly make this investment.
That is part of it. But the underlying part of it is because of risk. And if you speak to like an attorney at the SEC or something, they're going to say that the law is in the best interest of the people because they're looking for more sophisticated investors, not richer investors. They say the word sophisticated a lot.
Interesting.
And there could be like a really smart guy who's in finance who is making 130 grand a year and he won't get accepted. It's not always people putting all their money in. I think they should make a standard for knowledge based. Like, do you understand finance and the markets enough to take this educated risk? It shouldn't just it's pretty much blindly the money thing. It's not even like, are you good for this?
So would that be like it wouldn't be like getting your CPA or anything.
No, an accredited investors, I think
what kind of knowledge test what would that look like? What would you be tested on?
I'm not totally sure, but I mean, it could be something like, have you invested before? What is your prior investment experience like? Maybe to be an accredited investor, you have to have been invested in stocks for 5 years. Maybe it doesn't even have to be. You don't need a good P&L or good realized gain loss, but at least it shows they need to have some sort of prereq to see that you've put time in to learn it or have been invested. And there could be a small test. I mean, look, if you're really actively looking to invest in IPOs, you should know what you're doing. You should be able to pass a simple test once in your life to do it. You know what I mean?
No, I think that's reasonable. This is it's kind of a new idea. I was curious what you thought about, what that would really be looking for in terms of the knowledge.
I think a test is not unreasonable. It doesn't have to be as intense as like a CPA.
Sure.
But it's saying, all right, you want to risk your money on higher risk investments of new companies going public or something, or a real estate venture or whatever, at least take this fairly easy test to make sure that you know what you're doing. Do you know what price per earnings is? Like basic shit. Do you know what a dividend is and how they work?
Yeah, I think that makes a lot of sense. I don't think it should entirely replace a financial requirement, either a net worth or a annual income, but as a component where maybe it could compensate for a lack of, if you can prove that like you're an exceptional trader and you can really prove that, you should be able to take higher risks with your money even if you don't have quite as much.
Yeah. So, I mean, what have we discussed so far? So basically, there's definitely the financial operations, the back office, front office, OMSs, EMSs, the actual technical infrastructure, software vendors. Then there's the banks, the credit cards, real estate kind of backed ICOs, things.
And I'm seeing real estate elsewhere, like definitely embracing crypto, where realtors are saying,
"Hey, it makes sense."
We have sellers who are open to taking down payments in crypto or open to getting paid entirely in crypto, and I know I've spoken to mortgage brokers who at Chase who have done deals with down payments partially in crypto. So
really,
that's starting to happen.
That's awesome.
Chase accepting that on some level is pretty cool.
Yeah, because they could be a little strict sometimes.
Yeah, for sure.
Yeah, or J.P. Morgan, we know could be strict at least, which owns Chase. But yeah.
But yeah, I think real estate is another one that'll definitely push crypto forward little by little.
Yeah.
And then there's some sillier ones.
What, like porn?
Yeah. And video games.
Yeah. Yeah, I mean, porn is pretty self-explanatory, right?
Yeah, I mean, porn, it sounds silly. It's not silly. It's a massive industry. And historically, they push technology further than any other industry. They're early adopters for everything. Blu-ray, you name it, 3D, 4K. They definitely like to be ahead of the curve on that. And there's Spank Chain, which is crypto definitely targeted at the adult entertainment industry.
Yeah. Titcoin, I remember a couple years ago.
Titcoin.
Yeah. But I mean, it's a huge industry. If they can accept crypto and they can, have people. There's a lot of ads on those websites. Not that I would know, but there's a lot of ads on those websites, and like using the Brave browser type of concept. Like there are ways to pay out. Like there's a lot of money that can be just floated around that industry.
It was a very Spank Chain was a similar premise in some ways, where it's a currency for paying adult entertainers on the internet, and it's safe and secure and anonymous and all that good stuff. So it takes it a little bit further.
So I guess it helps them also be like an independent artist.
Yeah, no, exactly. That's definitely how they're marketing. You don't need to be bound to label. I don't know if that's the correct terminology for that industry.
Or something, yeah. Not that I know. But yeah, no, that's interesting. And then a softer one, but also not silly, is the video game industry.
Yeah. So there's Wax tokens, which was put out by OPskins. .com. So that's the Worldwide Asset Exchange, and that's basically, OPskins, for those who don't know, is like a marketplace for buying and selling digital
in-game items.
In-game items, yeah, there you go. So Worldwide Asset Exchange makes a lot of sense. Universal exchange for trading these digital assets, whether it's weapons from Counter-Strike or potions and something else.
Crypto will definitely revolutionize gaming. Even if games started making systems where, as long as you're running, let's say you're playing World of Warcraft, right? You're running a Blizzard client, or you're playing League of Legends, you're running a Riot client. As long as you're running Riot, they could say, hey, we're going to be using some resources to mine this coin in the background. Or in exchange for letting us do that, you can earn real crypto in the game and actually withdraw it.
Yeah,
I think that there are ways to really not gamify crypto, but literally just put crypto into existing games, and actually earn crypto as rewards instead of just in-game gold, because you're using computing power, and there's ways to share that between the company and the gamer. It's interesting. I don't know.
That our parents never believed that we could turn video games into a true paying profession.
Yeah, I know, right? They never would have guessed that.
Thanks for buying me that Game Boy, Mom.
Yeah. So we spoke definitely around the business side. We haven't, I don't think we need to go into the technical side right now. There still are actual issues with like chain scaling and the private versus the public blockchain infrastructure and the Lightning Network infrastructure and off-chain infrastructures and transactions. Would you want to talk about that in another episode?
Yeah, I think we can go deep on that in another episode and really talk about a lot of those more technical aspects of it, oracles.
But that is a big blocker too, right? So we spoke about the business obstacles and potential business opportunities.
Yeah,
but there are also technical opportunities.
Yeah, technical scaling issues that we can definitely spend some time on.
Yeah. So that was fun.
Yeah.
That's really all I have to say about my view on the big obstacles for institutional investors to get in, and then any of the other industry obstacles. Yeah,
the business of crypto and the business of blockchain has a long way to go, but it's also come like a very long way. So it'll be exciting to see where it continues to grow and expand to. But yeah, I think we've done a good job outlining some of the issues and where progress is being made, and things that are still gaps.
Yeah, so thanks for watching. We kept this brief. If there's anything you want us to dive into, if you want to learn more about front office versus middle office versus back office operations and opportunities available for those crypto entrepreneurs or banks and credit cards or video games, we're more than happy to do a detailed segment on that.
Yeah, and if there's an industry or a segment you feel that we totally missed, drop us a comment and we'll happily cover that.
Yeah, cool. So thanks for watching, and we'll catch you next time.
Thanks, guys.